Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar continues to hold its stride around the 73-cent handle after at least a couple of attempts at the top side of the resistance around 73.55. I still hold the view that into this week we could see a slight bearish sentiment returning as it continues to fail to that top side level. Looking down towards the support around 72.5, would see a break at 72.10, open the way towards a region of 71.30 and given an objective of 70 cents. The technical implications at this stage are a little bit mixed though. The MACD is negative and the RSI is attempting to show a slightly positive bias. Nevertheless, the view from the broader picture is expected to see this market eventually turn down. Looking at the euro, well, after the attempt on that 117.50 level, the market has rebounded and managed to hold above the 118 handle. Nevertheless, let's look and see how the market plays into this week. We do have a slightly limited economic calendar. However, the FOMC speakers should be around, with one main event being Jerome Powell speaking this week, along with Secretary Steve Mnuchin. It is ascertained that we should see further weakness to the euro as the US dollar slowly attempts to regain its momentum, and therefore we should not rule out tests towards this downside level of 117.5, as beneath here looks towards 116 to 115.5. Any advances still views the resistance around 119 figure 45 as a potential supply zone. Dollar yen is near its objective. The call was at 104 figure 15. Well, we're at 104.26 low. Trading from this market, I would say that the ADX is overheating and also the RSI is extremely oversold. And as before, if you look back here in July, when we were this low, we got a very significant strong candle that gave us at least a nearly 200-point rally. If you are still maintaining in a short position, I do recommend to at least start lowering your stop losses according to your risk management, because of the fact it's being oversold. We could see a rebound like before from 104, and keeping a stop loss in play, if we do see a rejection from there, will give you some protection. And on the other side of that coin, if we do see a break of 104, that would see a further tumble towards 103 to about 102.5, still keeping you in that position. Nevertheless, continuing to monitor your positions as the market declines if we see the break. Overall though, being oversold, I am a little bit cautious towards the downside. The pound a little ready to go on after its recent break, flirting from the top side range around 120, the high 129s. The market is expected to show a little bit of bias to the downside as the MACD is struggling here. Therefore, could look back towards this key level of 127.5. Any upside attempts should find resistance roughly around 129.85.95 to a cap around 130.60.70. It is quite interesting that we've seen a hammer, we've seen an inverted hammer, we've seen gravestone, and we've seen a lot of other dojis here to represent the market as being somewhat cautious to the downside. As it's testing lower, at least putting its foot into the water to see how the temperature is, we can see there is some bullish divergence. I still feel there could be a slight rebound here. And if we do see one in dollar yen, or even see a bit of a squeeze in the pound, could see the market stage a rebound back to 136 to about 136.5. Gold has gone pretty much hardly anywhere since its last couple of attempts at 1,970 to 75 area. I still view that the market could close underneath 1,926, and if so, would open the way back towards the lower side of the range around 118.60 to about 118.80. But nevertheless, keep an eye on this pattern here. There is a little bit of confliction here when it comes to the MACD, and therefore could see a slight impulse up to 70 again for this week, but likely to fail. Wrapping up with oil, well, the market is attempting to at least push higher as we now get above $41 a barrel, if my view is correct. And with the MACD support in this case, looking up towards 42 to about 42.5. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoyed a great start to the day and to this new week.